Riders on the storm. Riders on the storm. Into this house we're born.
Love that song. The Doors. I'm sure most of you, I grew up with that. I'm kind of an old soul here. My grandparents, my parents listened to that. I remember almost every weekend. So, huge Doors fan. Well, Riders on the Storm, it's very, very apropos for this weekend show. Again, if you missed me on the first segment, I was going to name the show. I was going to name the show a little differently today. I was going to say the calm before the storm, and the storm hit Friday. And those of you who were under a rock or didn't want to watch the news channels in the market, we got punished. Dow down over 300%, S&P down 2%, NASDAQ down 2%, Russell 2000 down over 2% as well. That's a beating. It's the worst day we've had since January 8th in 2 months. I was talking about how we've had the longest, basically, sideways motion in the stock market, really historically. And what happens is it's like this spring, this coiled spring. It's this energy that builds up. It goes sideways and sideways and sideways. And what happens, it'll either break up or break down. It's usually because of an event. Something will happen external that will make it go up or down. This is just over years of doing this. This is just what you can see on a chart, what it looks like. You can watch it. And you can tell it's going to break up or break down. And it broke down. And it broke down specifically because the Federal Reserve is definitely getting much, much more hawkish, or what that means in English is they're looking to raise interest rates. And why is that important? We've been at zero interest rates for 8 years. We've been on this sugar high, artificial stimulant, whatever you want to call it, steroids, levitating. We're going against the laws of nature because so we have this arrogance now as a government, as a Federal Reserve body, that we can bend gravity, that there's no such thing as a recession, that will prop up markets for years. There's a price to pay for that. And the price to pay is devastation of markets, because when you do that, you're going to cause outside events. You're going to have these outlier events just like happened in 2008. We're right back in the same place, and in my opinion, worse than we were. And one of the reasons is because of bonds. And I'm going to talk about bonds a little bit, because bonds are really this stealth asset that you don't realize how much risk is in your bond portfolio. I want you to take a look, if you can, over the weekend, and look at either your portfolio or look up a bond index and see what happened today. What normally happens in a normal market is you'll see stocks go up or stocks go down, and what happens? You have this great balanced portfolio and your bonds go up, which helps to dampen the volatility, correct? Most of you out there have these balanced portfolios. We don't manage money that way. We do things a lot differently to really protect downside for our clients and make sure they get as much upside as possible. Our goal is to beat the market in a bull and bear market. So we want to actually beat the market over time with less risk. And I'll tell you how that's done. But that's what we do, and that's what our goals are. So bonds, let's get back to bonds. So bonds are a really high risk asset. So what happened on Friday is stocks and bonds fell precipitously. They got killed. A 10-year bond or a 20-year bond, there's a ticker symbol TLT, which the 20-year bond was down almost 2%. Think about that. That is supposedly your safe haven asset, and it lost as much as the S&P 500 and the Dow. So I've been warning about this, where you're going to see a situation, because bonds are in a bubble, stocks are in a bubble. You're going to see what you saw Friday happen more often, where everything sells off. There is no protection. So if you're just own stocks and bonds, and for every 1% rise in interest rates for bonds on a 10-year bond, you lose about 8%. Think about that. Well, David, my bonds are safe. No, they're not. Warren Buffett says it better than I do. He says bonds should come with a warning label. And what he means by that is you're owning these instruments, these investments that are paying you like nothing, but have all this risk, and that risk reared its head on Friday. That's what he's talking about. You're going to lose money in your bond portfolio if rates rise. Okay? From 1980 to 2016, bonds have been the best asset class you could have ever owned. Why? Because rates fell from 15% to 1.5% in 30 years. Okay? Now where are we at? Now rates are low, and they're going to probably go higher. So guess what? The inverse is going to happen. Bonds are now a very poor asset class to buy and hold, in my opinion. So if you want to learn more about the way that we protect capital, which is definitely unique. Most advisory firms do not manage money the way we do. we're going to look to how do we insure your portfolio against market risk? How do we create a form of insurance like you have for other assets to where we can mitigate the downside mathematically? Okay. So if you want to learn more about how we're going to manage your portfolio, how we're going to mitigate risk and not have you get blown up in these markets, I mean, you got to be careful. You got to be careful. Give me a call, 1-800-611-1967. That's 1-800-611-1967. And you can sit down with me personally, not some advisor, me personally, the guy who has the name on the door. And I will offer you a complimentary second opinion where I will dissect your portfolio, let you know the risk that you have. Most of you have no idea. And most of you have a lot more risk in your portfolio. It's just the bonds I told you. Can you measure the risk of the bond portfolio you have? I can. So if you want to get a real review from an independent advisor, a fiduciary, what's a fiduciary? Fiduciary is someone who has to put your interests ahead of their own in the firm. It means I have to look out for you. I'm unbiased. I have to do what's best for you. In most big banks, they don't have that duty. They don't have that high level of duty that we have. So we want to make sure that you get honest, real advice from somebody who's on your side and somebody who has the vision to look for other alternatives than traditional portfolios to help you protect and grow your money. So if you want to get a second opinion again, call me at 1-800-611-1967. That's 1-800-611-1967. Or again, go to my website at reyesplan.com. That's REYES plan.com. I'm really excited too. We're doing this workshop series, which has been unbelievably popular. And it's called Annuities, the Good, the Bad, and the Ugly. Great. I think that's a great title. I thought about it, so I'm not patting myself on the back. But really, that people are confused about annuities. They get all this misinformation. The ads, I see the ads right now. Ken Fisher does it of Fisher Investments. I hate annuities, so should you, right? And then you get all these people on the radio, you've heard them say, oh, buy an annuity. Well, which is correct? Well, how would you like to learn about this with myself and Brett Winterble? Brett and I have formed a relationship, and he's a great guy, smart guy. I text him every day, and he gives me all the polls, and he's awesome. He's a great guy. He's took over for Roger, and he used to produce for Roger, and so I'm just so happy to be affiliated with KFMB and with Brett. He and I are going to do a workshop again. It's going to be Wednesday, September 21st at 6:30 p.m. at our wonderful offices in La Jolla, right off La Jolla Village Drive. And you will have a great time. It'll be about an hour and a half, not long. 6:30. It's limited to 20 people total. So like 10 families. We make them very intimate. We hold them about every 2 weeks. And I'm only going to give this topic another 2 weeks to do. So I really recommend you attend this workshop and get a ticket. You have to have a ticket to get in. You can bring friends, family, whatever you want. You need to be near in retirement. So we have gotten some calls where people that are really young, 30s and 40s. Quite honestly, we need to have you be in your late 50s, 60s, 70s, doesn't matter, but in or near retirement, because this is what it's meant for you. Our average age of our clients is about 67 years old. So we're really good at doing planning, maximizing Social Security, doing all those kind of things, reducing taxes for you, protecting your estate, protecting your money. And so we're responsible for, clients' entire wealth. So we're not here accumulating assets like some advisor firms, which is great. We're here to help you when it matters most. And you're looking, how do I distribute assets? How do I mitigate taxes? How do I choose Social Security? So we're not going to talk about this in that event, but if you do want to attend, give me a call, 1-800-611-1967. That's 1-800-611-1967. Again, or go to reyesplan.com. That's REYES plan.com. And again, this workshop's called Annuities, the Good, the Bad, and the Ugly. So let me give you some peak highlights here. We're going to talk about, is an annuity right for you? How to avoid the high cost annuities and even buy an annuity with no fees. How would you like to do that? Right? So we're going to talk about all these topics. What is it? What is a bad annuity? There's annuities out there that cost 5-6%, 4-5-6% in fees alone. How would you like to use an annuity to protect your capital? How would you like to use it to protect your capital and invest in the stock market without downside risk? Give me a call, 1-800-611-1967. That's 1-800-611-1967. Thanks for listening. We have a couple more segments left. We're going to be talking more about the stuff we're discussing. This is David Reyes, AM 760, KFMB.
A well-designed, tax-free retirement. retirement, and you can have it.
How come I didn't find out about this before?
The retirement architect, David Reyes, will continue next.
Consider this your personal invitation to join the Reyes Retirement Institute Wednesday, September 21st at 6:30 p.m. for Annuities, the Good, the Bad, and the Ugly. A lot of people are talking about annuities. Find out what they can do for you and your retirement. Wednesday, September 21st at 6:30 p.m. You must reserve your seat, so please RSVP. The number to call is 800-611-1967. Annuities, the Good, the Bad, and the Ugly, Wednesday, September 21st at 6:30 p.m. at the offices of Reyes Financial Architecture and presented by the Reyes Retirement Institute. We'll see you Wednesday, September 21st at 6:30 p.m., but you must RSVP. 800-611-1967. That's 800-611-1967.